Alright guys, welcome back to MMGinvest and WolfPack Cryptos. If you guys are new, check out my other YouTube channel. It's called MMGinvest. And I need that channel to grow to 1,000 people so I could throw ads on there. And I'm not trying to get money off the ads, but when you have ads on your videos, what happens is YouTube puts it in the search results when people search for things. And that's how my channels could grow. Helps them grow a lot. And there's other videos on this channel that I don't post on the crypto channel. And I'm not going to be posting everything on both channels. I'm going to start only doing stock market for this channel and cryptos for the other channel. Alright guys, first of all, this is not financial advice. Consult your financial advisor. I am not your financial advisor. Not a licensed financial advisor. I could be wrong. Have your stops in place, emotions out. Equities and cryptos are extremely volatile, extremely risky. Do not invest in anything you're not willing to lose or lose sleep over. Alright, so let me talk about Trump's tweets. Where are they? So, I mean, this is crazy. So, this was today, earlier today, a few hours ago. Up like a rocket if we did some lowering of rates, like 1 point, and some quantitative easing. Yes, we are doing very well at 3.2% GDP, but with our wonderfully low inflation, we could be setting major records and at the same time make our national debt start to look small. Yeah, but all right, I'm gonna dissect this and get into this. All right. He also tweeted, China is adding great stimulus to its economy while at the same time keeping interest rates low. Our Federal Reserve has insensibly lifted interest rates even though inflation is very low and instituted a very big dose of quantitative tightening. We have the potential to go. Well, it's obviously an election season, right? Election year. And he needs to get reelected, right? So, this is crazy. You guys have to understand. When an economy is strong, the Fed is supposed to raise interest rates and normalize the interest rates on all the debts outstanding, public and private. And the problem is, if the economy is running so strong and the stock market's going up and up and up, and you don't normalize interest rates, matter of fact, if you cut interest rates or start money printing on top of the fact, what happens is you're going to blow. I mean, no one's ever really done this before. So no central bank or economy. I mean, actually they have. It's called Zimbabwe and Venezuela and Weimar Germany and Hungary did it. And but what you do is you blow a giant debt-driven bubble. And eventually it's going to pop. It's not if, but when. And when it does, the Fed's not going to have any ammo to stop the economy and stock market imploding. Because, one, they're not going to be able to lower any interest rates. I mean, we're literally, the interest rates we have now are nothing. They're not normalized. Normalized is like 8%. We're still sitting around 2%. And if we lower interest rates before a stock market crash and an economic slowdown or recession, which, if we lower interest rates prior to that, and then even start up the printing presses, what's going to happen is the next recession is going to turn into literally a hyperinflationary depression. And the dollar is going to get sacrificed in a big way. Like, you're going to have runaway inflation. I mean, that's what Trump's asking for. So let's before I'm not going to get into the charts now. Let's just do some theorizing and game theory here. What is he thinking? All right, this is what I like to do. What is he thinking? How is he going to do this? Well, for one, he's more than likely going to get reelected. And he's going to keep the markets artificially up, right? And this is how he's going to do it. And anyone who says the market is not manipulated does not know what they are talking about. They have no idea how these current day capital markets work. Obviously, it's manipulated by the Fed. If it wasn't manipulated by the Fed, then they wouldn't be doing anything. That's why we have the Fed and we have these FOMC minutes and meetings, and they manipulate the stock market with interest rates, and then they also do it by printing money. And if that's not manipulation, I don't know what the hell is, because where do you think all that money goes? It goes into the stock market. That's exactly why Trump wants them to lower interest rates and do more money printing, because it makes the stock market go higher and higher and higher, and it gives you a false sense of wealth effect, right? People see that their Roth IRAs, 401ks keep going higher in value, so it gives them the confidence to keep spending money, and money they shouldn't be spending. And people feel confident. They keep shopping and shopping, because the United States is a consumption-based economy. It's definitely not a industrial economy anymore. We don't make anything anymore. So there you go. I mean, this is insanity to people who understand what's going on. It's absolute insanity. So, and here's the thing. Can you blame Trump? Not really, because he can't let the stock market fall, because the next time it crashes, it'll be the last time it crashes, because they might not be able to stop it from just completely imploding. And who knows how bad it'll be. Banks go under. Everything just goes under. Brokerage, I don't know. Mad Max scenario, it could easily happen, because we're in uncharted territories. We've never had an everything bubble this big in human history. That's international. It's global. Yeah, so let's keep the music playing, I guess. What is he thinking? Also, we have other things going on, right? We have here's the free MMGinvest chat room where you guys could come. So there's videos of tanks running over people in Manito, Venezuela here. Obviously, listen, this is a geopolitical war, like a proxy war. Basically, it's for resources, right? They have the largest oil reserves in the world, untapped. And China and Russia and the U.S. are going to fight over it. The U.S. can't let Russia and China just go into South America and take all their resources. And China and Russia want that because they're the upcoming new Eastern superpowers, right? Europe and the U.S. are in decline. The same thing's going on with Iran. We can look at the war stocks, right? But I think what's going to happen is, the agencies are going to go in. They're going to fund revolutions. That is exactly what's happening right now in Venezuela. And then the revolution will win because it's funded. And then eventually they'll put in a puppet, right? And then the oil companies are going to go in, the U.S. based, and we're going to start getting some oil out of there, some cheap oil. So, these videos are in the free room of MMGinvest. And that's, it's the old tale of superpowers looking for energy and strategic land. So, what is Trump thinking? Well, to save the United States and to save the petrodollar, because, the dollar is not backed by gold anymore, but it is still backed by the purchasing of oil internationally, globally. Well, we're going to want that energy, right? To keep the music playing in the U.S. and keep the economy and the dollar propped up. So, and, the U.S. can't let Russia and China get their hands on it because China's pretty evil. Russia is, think what you want about them, but you know they're not the good guys either. The U.S. Not the good guys. No one's the good guys here. Maduro, he's not a good guy either. I mean, that's what the end of socialism looks like. Your country falls apart, and then the vultures come in, right? The hyenas, which are other countries, and they take your shit. You guys need to read what is it? That let me bring it up. The Tales of an Economic Hitman. I've read the books. And the Economic Hitman. I read them many years ago. Or actually, I listened to them on Audible. And you guys need to listen to this on Audible. You know, when you're driving to work or whatever. Great, my battery's dying. Well, when it dies, holy crap, it's dropping. Alright, so you should get this book on Audible right here. And it's really entertaining, and it's based on truth and real events. And listen to it because it's very interesting. It pieces together the world like you've never thought of it before, and the way the world really works, how imperialism works and whatnot, right? And how modern imperialism and economics work, right? So here's my theory what the U.S. is going to do. Well, we're going to have to maintain the petrodollar, so Venezuela, and then interest rates are going to be lowered in the coming months. It's an election cycle, right? That's what every president does, so they get reelected. And we're going to have a market melt up. Now, on the short term here, this is the S&P 500. We need a pullback, and it's actually beneficial if everyone wants the market to go higher this year, right? Also, there is sell in May and go away. Earnings are slowing down here, and the summer doldrums are coming into play. But they're going to lower interest rates over the summer, maybe later this year, going into fall, just to prop up the market. But either way, there has to be some sort of pullback. We are making new all-time highs here. I'm not even sure if we did today, but after we should get a pullback. And then we might see QE, right? Money printing, quantitative easing. And then the market's going to melt up, right? Going into the election, possibly. Or maybe right after the election. Now, that makes perfect sense. And then, I don't know how long the market can keep going higher and higher until infinity, right? But, they're determined to keep it going. Because if they let it go, if they let it correct again, or if we revisit this this bottom down here, somewhere down here, anywhere down here, or we fall out of this giant channel, you see these purple lines, this is the top of the channel, this is the bottom of the channel. If the price falls again below this channel, then we might actually get the so-called crash everyone's been warning about for decades. But this is also a weekly chart on the S&P. Let's go to a monthly. Let me show you guys something. So with QE and cutting interest rates, even though the stock market's hitting all-time highs, we're going to get a blow-off top. And this is also, in a few months, I mean, this is going to be the longest bull market running in U.S. history. There's also troubles in Europe and with China, so a lot of capital flight could keep coming into the U.S., especially if they see the markets going higher and higher until, I mean, there's no stop to it, right? But let me zoom out here real quick if I can. Let me remove this. There we go. So I've seen that hyperwave thing, right? It's really just the Wall Street cheat sheet bubble chart. And I've many times I've charted this, right? So here it is. This is the Wall Street cheat sheet. So let's go back to the monthly on the S&P 500. This is macro, all right, guys, like long term. Let me put this on logarithmic. It already is. Let me take it off log. That actually makes more sense. All right, so phase 1, phase 2, phase 3, and this is phase 4. After 4, you get a huge drop. Or you could, let me do this again, or we could think about it differently here. This is why I also want to do a log, but this may turn into a giant phase 2 right here. Then this is a phase 3. And this is a phase 4, which gives you a melt up, blow off top euphoria in the stock market. And then we get finally the big crash, like 2008, 2009. And then we get that bull trap. And then boom. Then we go lower and we go into a multi-decade bear market. And I've done this numerous times, so people who've been with me, they know what I'm talking about. Let me adjust this, something like that. I mean, it's going to look way worse. It's going to look something like this. Bull trap. And then we go into a bear market. Now, I mean, you can see this so easily on Bitcoin, by the way. All right, guys, so this is the 1, 2, 3, 4, 5, 6, and 7 takes you all the way back to where this broke out from. Where did it break out from? In like 1981, that's where this multi-decade bull market in stocks broke out. And in the bond market, and the bond market's also been in like multi-decade bull market, right? And interest rates are going to go back into a bull market because interest rates have been in a bear market because the central banks artificially manipulating the interest rates on everything, on all debts, public and private, money, right? Money is debt. And that's fueled this giant debt-driven Ponzi scheme money printing bubble, right? All right, so let's take a look at short-term pricing here. I didn't want to draw on this one. So here's S&P 500. On the daily, we're coming up on a 7 count, so maybe 2 more days upside, and then it's going to pull back. And I know I've been saying this thing's got to pull back. We've had pullbacks, but nothing like a correction to this giant rally that's been running for like 3 months now. On the weekly, we are also on a 7, so maybe some sideways trading or some upside for the rest of this week and next week, and then eventually sell and may and go away is going to come into play. Oscillators are all overextended, like all of them. Let me let's take a look at the oscillators. This is the S&P 500 still and the RSI overextended. All of the oscillators are overextended on the weekly, including the daily, I believe. Yes, the daily as well, all overextended. So we're still going to see some sort of major pullback. Here's the SQQ for the private members of MMGinvest. I'm still holding this. It's not really leveraged up, so, and I'm going to double down and triple down here. Here's the gold ETFs. They've sold off. I'll talk about gold in a minute. Here's the Russell 2000 smaller companies. Now this is interesting, right? The Russell 2000 is acting a little differently. For one, it's breaking out of this giant descending triangle. Two, it's breaking above major resistance right here. And this is also starting to look like a cup and handle. Cup and handle. The cup and handle gives you a bullish breakout. Or you could even make this into an inverse head and shoulders. This would be the left shoulder, right? FANG stocks. FANGs are hit major resistance up in this area. So we'll see if it breaks back below. I think if FANGs break back below, the market's going to get that intermediate pullback for the next few weeks, maybe even a few months. We'll see. Here's E-mini light crude oil futures. Now it's interesting with oil. I wouldn't trade oil because with things going on geopolitically down south, right, in South America, and with Iran, right, I don't know what's gonna like how oil is gonna react. All right. Here's the Nasdaq weekly chart. The Nasdaq is on a 7 count on the weekly. So 2 more weeks, at the most 2 more weeks of upside, guys, to the stock market. And then there has to be some sort of pullback or correction. But the correction pullback could start like tomorrow or before this weekend. And if the smart money if I was the smart money, I wouldn't be in this. I wouldn't chase this for another 5% or 10% gain, right? It's all overextended, by the way. All right, so where did my markets watch page go? All right, gold. Let's use the other chart for gold. Here's gold futures, the daily. And I posted this in the free chat rooms as well. Gold's on a do or die moment. It needs to seriously hold above this support right here, about 1280. It needs to stay above it. I mean, it could break below 1280 for like a day or two, or go to 1270 or even 1260, but it needs to get back above it quickly. So this is the daily. Let's take a look at the weekly. Now my moving averages here crossing back up to the upside for a giant golden cross. I know it's not a golden cross. I'm just calling it that. This giant bullish cross that the last time it did that was 2002, and it created this decade-long bull market in metals. It's about to cross, right, in the coming weeks in this summer. And the price is trading into it. So I still wouldn't freak out. You know, if 1280 is taken out, yeah, the price could drop pretty hard and quickly to 1250, 1240. But then it's trading into the cross, and then this cross should shoot the price back up into the summer, so we could get a huge rally in the summer from 1240, and then gold's going to go into a bull market no matter what happens. The stock market keeps going higher and higher. Like I said, I believe metals are going to go into a bull market because the only reason the stock market's going higher is because QE, money printing, and cutting of interest rates, right? So we can see the stock market go higher You can see metals go higher, and we can see the dollar stabilize because we're going to go and pillage some oil. It's crazy, guys. So, you know, for the long term, if we do see metals go higher with the stock market, when the stock market does have its day of reckoning, the metals are probably going to crash with it for sure then at that point. But only if metals break higher and keep going higher and higher with the stock market. So at that point, but you know, so metals, let's say gold breaks out and goes higher and higher with the stock market. When the stock market has this day of reckoning, at that point, you don't know. I mean, metals could be at 1,800 an ounce, 2,000 an ounce, or higher. And then it'll pull back, have its correction with the stock market. It might fall back to 1,500. And then it's going to shoot up to like 5,000 when the stock market fully starts, falling apart. I don't know. I'm just guessing at this point. I'm just thinking out loud, and I'm theorizing. It's game theory, right? So that I'm just letting you guys know what I'm thinking right now. Also, this is a giant ascending triangle. If the price, so if gold could get back up to 1370, and we're going to create an ascending triangle, and this could play out for the rest of 2020, and then possibly break out higher. This is a weekly chart though, so I mean, this could take us into 2020. So 2021, and we might break out into a bull market. We'll see, guys. I mean, we have to take this week by week, and we'll see. That's pretty much it for now. Those tweets Trump sent out, I mean, if those aren't bullish for metals, I don't know what is. Still, they're going to smack the price, and the price is trading into that golden cross, so maybe a few more weeks of downside till 1240, and then we'll see if we finally get a huge rally from there. I do not think we're going to break under 1200 and go to like 1,000 or something. I just don't think it's going to happen. The smart money should be buying it up right now, especially with geopolitical tensions. I mean, the U.S. Fighting over, all that oil down south in South America, and this is going directly against Russia and China. I mean, you're going to see some real uncertainty and possible, you never know, some major war could break out. I don't know. I doubt it, but everyone wants the resources, and in the end, everyone's going to fight for it. So keep that in mind. Alright guys, if you found this informative, smash that like, leave comments in the comment section. It helps my videos, and please share my videos. That means more than you guys know. Also, if you're new, I've done research. You just go to MMGinvest.com. Just type that in Googly here, and here's my website. Click on that video on the website, and you'll see what my research, what I've done with my research. There's like a preview of it, and you can purchase it if you want.